Welcome to this week's look at the state of the New York City real estate market. This is for the week of December 11th to the 17th. This is actually going to be my last report for 2023. I'll be back in 2024, the beginning of January, and I'll be back with a kind of wrap up of what happened in 2023, as well as giving you a bit of a forecast of what we can expect in 2024. We're going to get started, as we always do, with the luxury market. If you have any questions at all, please post those below. You can always reach out to me directly at Sotheby's as well. Okay, let's get started. There were 18 contracts signed last week in the luxury market. That is 6 fewer than the previous week. 3 of those contracts were for properties in the trophy category, meaning they were priced at $10 million and above. 11 of those were condos, 5 were co-ops, and 2 were townhouses. 9 were uptown and 9 were downtown. We're going to take a look now at the number 1 contract that was signed last week. This was Penthouse A at 181 East 65th Street. It was asking just under $18 million. That was reduced from $20 million when it was listed back in February. This is a triplex. This is a condo. It has just a little bit over 6,700 square feet. It includes 6 bedrooms, 5.5 bathrooms, 6 terraces, and 2 balconies. The lower level of this triplex features a 36-foot living room that faces Central Park, and it opens onto a terrace. Upstairs is a master bedroom that also faces Central Park. This building is known as the Chatham. The building was designed by architect Robert A.M. Stern, and it was built in 2000. Amenities include doorman, gym, valet parking, and storage. The number 2 contract was a townhouse at 224-226 Waverly Place. It was asking $15,750,000. It was listed at the end of August. This townhouse is actually 2 houses that were combined back in 1961 to create a 4-story, 35-foot wide house with 13 rental units. That very likely means that somebody is buying this to convert it to a single-family home at 35 feet wide. This is quite unusual and will be, if I'm correct, this will make no doubt a very stunning single-family home. The total weekly asking price sales volume, $143,240,000. Average asking price, $7,011,667. Median asking price, $5,747,500. Average discount from original ask to last asking price, 11%, and average days on the market, 598. So that's it for the luxury market. We're going to turn now and take a look at what happened in the Manhattan market last week. The supply in Manhattan, as we would expect it to be, is declining, down 37%. A little bit more than that for the week. 113 properties came on the market. Contracts signed also down a little over 9%, 160. Off-market properties, 198, down a little over 30%. The supply overall for the month down over 54%, 657. Again, this is not a surprise. We would expect to see this continuing right on through into January, maybe until the end of January. Contracts signed 668, down a little over 16%. Off-market 898, up a little over 9%. Again, likely sellers pulling their properties off the market, perhaps deciding they're going to opt out for the moment, going to come back on February, March of next year. We continue to be in a buyer's market. We do see this kind of going sideways trend. This is because the market is, in effect, in balance. We had just a slight uptick, contracts holding relatively steady. However, we are in a low liquidity environment, as I have been saying over these last few weeks, but we just don't have a lot of inventory. That is keeping the market relatively in balance, although we do see a market that is favoring the buyers. If we look at the liquidity pace chart, as I said, we are in a low liquidity environment. 668 marks this 30-day moving window of contract activity. This is about to be expected this time of year. November was not great. However, we have seen just a little tiny bit of an increase. It's just slight, ever so slight. After Thanksgiving, as you will see, the chart is suggesting that contract activity since Thanksgiving has shown a slight increase. What does all this mean? It could well mean that we've kind of bottomed out, and now we are starting to see a bit of a turnaround. Buyers becoming a little more engaged. Let's continue to keep an eye on this. We shall see. That is it for the Manhattan report. Now we're going to take a look at what happened in Brooklyn. If we take a look at the supply in Brooklyn, wow, we see that for the week, that really dropped over 44%. 507 properties came on the market in Brooklyn. Again, not really surprising. This is kind of a seasonal drop to be expected. 465 contracts were signed, down 15%, also to be expected. And off-market properties, 325, down a little over 19%. If we step back and take a look at the month, we see the supply, 507 for the month, down 44%. Contracts signed, down 15%. 465, and the off-market properties, 325, down a little over 19%. Again, no real news here. Continues to be a buyer's market in Brooklyn as well. Slightly different Brooklyn than Manhattan. It's a slightly different market, but overall, both markets are considered buyer's markets and continue to be in this low liquidity period. However, there are some indicators, as you'll see, that we may have kind of bottomed out. If we look at this liquidity pace chart, however, we do see that the liquidity is low. 465 is the 30-day moving window of signed contracts. If we look at the cumulative Brooklyn contracts signed since Thanksgiving, you see this little green shoot of contract activity. What does this all mean? It's really too soon to tell. We have to wait and see where the data comes in, and we will continue to keep an eye on this. As I said, we're going to know a lot more as the weeks go on here, as the data rolls in. So we saw that in the luxury market, 18 contracts were signed. Yes, that's 6 fewer than the previous week, but hey, what do you want? It's December. 3 of those were contracts that were signed at the trophy property level, that's 10 million and above, and they were split evenly between uptown and downtown. The Manhattan and Brooklyn markets continue to see a decline in inventory. That is very much to be expected, and it will very, very likely continue until mid-January to late January. Very likely will not see new inventory coming on the market until sometime in February. If we look at the demand, we did see just a slight little pop in demand post-Thanksgiving in both markets, and that is a really good thing. I am going to get into a little more of a full report about where we look like we could be going for 2024, and of course, I'll also give you the wrap-up in a more complete version about what happened in 2023 when, in my next report, which will be after the holidays. Sellers, there are definitely still buyers in this market. So we are seeing increase in offers, traffic, et cetera, et cetera. If you want to stay in this market, you absolutely can be sure that there are buyers. There aren't a lot of them. If you're determined to stay in the market and try to make this work. You really need to sell. If you're getting offers, great. Work with the buyers the best that you can. Know that prices are down about 10% across the board, so be informed. Buyers, that goes for you too. Really depends on the price point, but just kind of be aware that that has been the impact of this market. If you are not getting the offers that you want, but you are still determined to try to sell, then make your price adjustment and see if you can get the buyer's attention. Otherwise, you can take a break, come back on. That will likely start to happen in February. Typically, best time to list historically is March. But if you see more properties coming on the market, rates are coming down, you see buyers are jumping back in, then definitely get your property on the market if you're ready to do that. Buyers, again, it does look like the rates are going to come down. So if you're not a cash buyer or these rates don't work for you, then that should be good news for you. As I mentioned, prices are down kind of across the board about 10%. However, not every seller is going to take that kind of discount. It's going to depend on what they're able to do. It's also going to depend on if they've just adjusted their price or kind of where they're at. So, do the best that you can. If it's a property you really want, maybe you'll get a really good discount, but sometimes you have to pay a little bit more. Just remember, this is the home that you want. It's the home you're going to live in. And if you really want it, you should ask yourself the question, how are you going to feel if you lose it? So if you have to pay a little bit more, maybe it's worth it. This is likely it for inventory until end of January. So if there's anything there that you see that you want, make your move. And if there's not, then I guess you'll have to wait. Okay, that is it for the year. Wow, amazing. Can't believe this. Well, I will be back in 2024. I'll be back after the holiday. I wish you very, very happy holidays. When I come back, I will be giving you the recap for 2023. I'll give you my thoughts on what it looks like is going to be happening in 2024. I'm going to go get out my crystal ball. I'm going to shine it all up and give you my forecast. Be interesting to see. I actually do think I'm very hopeful for the spring market. I really do think we're going to have a very good spring market. As always, my thanks to the Olshan Luxury Report and Urban Digs. The work that they do helps me to help you to make great decisions. I will be back, as I said, in January with the very latest news on what's happening in the New York City real estate market. In the meantime, you can always post your questions below, and you can always reach out to me at Sotheby's. And as always, take care.